The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the September 15th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic and fabulous weekend. I know I did, and let's make sure that you and I, that we do all that we can do to have a magical Monday. Now, one of the best ways that we can start off our day is to always remember that fortune knocks at the doors of those who are prepared. In fact, Henry Ford, he once said that nobody can really guarantee the future. So just simply size up your chances, calculate the risks, and estimate our ability to deal with those risks. And then make plans with confidence, what I call take massive action. So for the next 2 hours, I'll do all that I can do to share with you extraordinary tools that help us identify where price is headed to. We'll utilize those A to B equals CD patterns. That's what we fondly refer to as that lightning bolt pattern. We'll look at Fibonacci expansions and contractions because the market is doing one or the other. And, of course, the combination of those two, that's what creates our butterfly and Gartley patterns out there. We'll take a look at the Rhodes Momentum Indicator, TAS market profiles, Chapman wave counts. We'll look at it all. And, of course, this is an interactive show. That means you can give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. That way you and I, we can go hunting for bulls and bears. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got futures basically flat out here. Quite a bit of a difference from last night when the futures opened up down pretty hard. Right now, you've got the S&P futures trade out at 1976. That's totally flat. NASDAQ futures up 3 points. They're trading out at 4,065. Dow futures up 3 at 16,909. Russell 2000 flat. King dollar on the move again this morning, up 11 pennies, trading out at 84.49. That means we've got a little bit of movement in the currency market, the euro. We'll take a look at the currency pairs out there. Goldilocks up a couple of bucks. Silver is flat, trading out at 18.60. Light sweet crude is down 72 cents out there, trading out at 91.56. Natural gas up about 2.5% this morning, up 9 pennies. I believe there's a little bit of a cold chill going through the north and the Midwest out there. Hey, just come on, join us down here in Florida. There is no cold spell going on down here. If I take a look at a few things that are popping in the marketplace here this morning, you've got Molson Coors Brewery Tap. That is on the trading to the upside here. Closed out at 71.80. Right now, trading out at 76.42 out here. Avenir Pharmaceuticals, AVNR, traded, closed out at 674. She's traded out at 969. That's a big pop out there. Anheuser-Busch, this bud's for you. Closed at about 111. It's trading out at 113. To the downside, you've got NPS Pharmaceuticals. She closed at 3270, trade out at 2668 out there. Looks like that's just moving back into a swing point low. We'll see if it's going to go ahead and try to break that. A quick peek across the globe out here. Over in Germany right now, we've got the DAX is trading up 18 points. So you got a flat market there. Flat market, in essence, in the FTSE. It's off 4 points. Yeah, the Nikkei was closed last night. Hang Seng, though, down 238 points. The Shanghai up 7. All right, so where do we begin our day on a flat trading session out here? Let's go check in on the futures market. Let's go take a look at the daily contracts here for each of the futures. Now, perhaps the most important thing, the most important first thing that you can do is go ahead and understand what kind of market it is that we are that is unfolding? Are we in a trending market? Are we in a market that is moving sideways out here? Let's go take a look at the NASDAQ. Let's go take a look at the king out here. The king of beers, Budweiser. No, let's take a look at the NASDAQ. This is the king. What we can see here as I blow up the NASDAQ, this is the current contract, the December contract that we're taking a look at. What I want to point out to you is, number one, if we take a look at the current contract, the move down on Friday inside the NASDAQ never broke that market profile low, 4,047 out there. So you've got so you haven't seen the NASDAQ fall apart whatsoever. In fact, until the NASDAQ falls apart, the market is going to struggle to make any kind of significant retracement out here. But what we can also see here, we can go ahead and shade that in. If you're listening on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. All I'm going to do right now is just simply draw in a consolidation. Of course, you can watch this show streaming live to your mobile device out there by just simply going to the homepage of tfnn.com. Upper right-hand side, you'll see a button, 3 little smartphone devices on it. Click on that. You'll see this show. You'll see my charts. Of course, the archive of this show is on Channel 9. In essence, if we take, we're at September 15th, and if we go ahead and say anywhere from August 22nd forward, what the market has been doing is consolidating. Now, trading in a consolidation market is a tough thing to do. It is a tough road to hoe unless you have a significant consolidation. Well, the consolidation really with inside this is probably about the 4,050 level, maybe up to the highs here of about 4,080, maybe 4,090. So you're talking only about a 40-point move inside the NASDAQ. That's nothing out here. And with regard to Friday's move, have we seen some reversal signals out here? Sure. We've seen 2. So we know where there's significant resistance, both formed by those key reversal, bearish engulfing style candles from September the 3rd and September the 9th out there. So just simply a market that's been moving consolidates. What should be our expectation here for the next couple of days, next couple of weeks? I don't know. But I can tell you right now what the market is doing. It's trading in a consolidation pattern out here. It's about a 50-point consolidation. Until we see a break one way or the other, we're just simply going to see price move sideways out there. That's what's going on inside of the strong indice. We take a look at the S&P 500. In the case of the S&P 500, it just barely cracked the market profile low. On Friday, you're trading right into it right now at the 1977 issue out here. But really, to a certain extent, if we take a look at the level of here's a prior consolidation, which in essence was the high of this trading session. It's a little doji on July 24th. Let's just draw a line across the top of that, and what we'll see is your trade. That's what we'll call being inside the lower part of the range out here. So that high. I didn't mean to do that. There we go. That high, which is 1977.75, it's a key level for the S&P. The S&P can close above that today. Then really what it does, it gets back inside its consolidation. And to a certain extent, you can say all that it's really been doing for a similar time period out here. If we go draw that in on the screen out here, it's really just simply been consolidating as well. Probably that's your consolidation box inside of the S&P futures out here, which basically is a low of about 1973, and the top of the box being about 1998. So it's really pretty narrow consolidation pattern out there. We haven't, if you take a look at retracements as a indicator as to what's really transpired here over the last several days, where you're going to see this is a normal move. A normal move is getting back to the 0.382 retracement level. Have we seen that in the S&P 500, or I should say the ES Mini? No, absolutely not. 1956 would be its level. You're trading at 1977 right now. So not much in the way of any kind of a breakdown out here inside of the market. How about the Dow out here? What's the Dow futures been doing? Yeah, you got it. The same darned thing out here. If you take a look at the Dow, which arguably was weaker than the S&P, certainly weaker than the NASDAQ. Why do I say that? I say weaker from the standpoint of the Dow being unable to clear really its swing point, which was back here on July 16th out here. It cleared it just slightly, but with no real conviction, not for many days out here, as opposed to the S&P 500, the ES Mini, which did clear its swing point high from back in July out there. So if we take a look at the Dow was not able to break down. Overnight it did, but all we saw here was we saw the market profile low 16,880 hold as a support level. So in the case of the Dow, it too is traveling into consolidation pattern. Again, consolidation patterns are very difficult to make money if you want to sell or buy the bottom of consolidation, sell the top, and then have your trade on the other side of that, and then be willing to flip positions. That's about the best way that you can trade it, or just simply wait for the breakout or the breakdown out here. Inside the Dow, the bottom of the consolidation around 16,900. The top of the consolidation clearly at the 17,050-ish type level out there. So that's what's going on inside of the Dow. Even in the Russell 2000, if we take a look at the Russell 2000 out here, here is the daily chart. Now, the daily chart, it's not anywhere near back to the top of its real consolidation range, which is up in the 1,204 area. But even over the course of the last several days out here, what the Russell 2000 has also been doing is really just been traveling in a sideways consolidation mode out here. So in the case of the Russell, it's broken through its market profile support level out here. Says you've got pretty good resistance at 1166. But that, in essence, is what's going on inside the market out here. Is the market going to continue to trade sideways? Maybe it is. You've got the Fed this week, right? You've got the vote over in where's the vote? It's Scotland. You've got the I knew I could think of it. We've got the you've got the Alibaba IPO coming out here. So maybe nobody really wants to do too much until all of these events. Of course, there's always events inside the marketplace. But look, the most important thing that you can do is the very first thing is take a look at the market condition. What is the market doing? Is it trending? And right now, what I will tell you is there is no, on the shorter term, needing a daily time frame out here. It doesn't mean a longer term time frame that there's not a trend, because there is. And that trend is still to the upside out here. But as we take a look at what's going on over the course of the last several weeks, what is the market doing? The market is just simply consolidating. So I'm going to try to make it as entertaining as I possibly can. We'll take a look at some markets that aren't consolidated. Why don't we go do that? And by doing that, let's go take a look at light sweet crude out here. We talked about light sweet crude last week. What we noticed in light sweet crude here, let me pull that chart up on my screen out here, at least what I noticed out there and I shared with you, is the bottoming pattern that we might be seeing here in light sweet crude. That bottoming pattern here was the first bullish signal that we saw inside Texas T out here. And that was a trading session of September the 11th out there. That was a key reversal session. Now, one of the things when we were taking a look at that, and it was on September the 12th, so that was on Friday during the Friday show that I pointed out to you, is you've got to have follow through. Because in the case of light sweet crude, this is as if, this is if you have football terminology, the offense kicked off in light sweet crude from a price standpoint. The kickoff took place up here at about 105.74. The team picked it up right here at about the $91 level out here. So they're really inside their red zone. They're inside the 10-yard line, and you need to see some follow through. Well, I can tell you on Thursday we didn't see any follow through, and we didn't see any follow through yet here this morning. We haven't seen a test of that key reversal low out there, so it makes it very suspect. But what I can tell you is the bulls are out here inside light sweet crude. We'll take a look at it a little bit more when we get back from this first break. 877-927-6648. This is Steve Rhodes. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were taking a look at Lightspeed Crude here before we went to break. Let's take a look at a couple different patterns out here. Let me explode this up a little bit on the screen for you. Let me see if I can do that. There we go. Let me explode it just a bit more out here. So we take a look at that trading session here on the September the 11th. Really, we had two different patterns that were taking place. So you got that nice bullish engulfing candle out here. That bullish engulfing candle key reversal trading session is something to pay attention to. What we also had taking place here, if we take a look at the relative strength indicator, I'm just going to draw a line right there. And so you can see we had price moving lower, and we had price moving lower with less relative weakness out there. That's always something to be cautious of. It's really an early sign of a potential reversal that could be unfolding inside of the marketplace. So we go take those. So that's one thing to be looking for. Now, we haven't seen any follow through today. Now, the candle that's being formed inside Lightspeed Crude today has no meaning, no reversal meaning, I should say. If you were to see it close, though, today, right around 92.37 and 90, and there wasn't much more of a spike above that, you'd have a hammer candle. So you'd really, what the market would be communicating to both you and I is that the bulls are ready to defend this position out here. If we take a look at A to B equals CD down patterns inside of Lightspeed Crude, you come off of the high. You could probably choose either June 23rd or July 25th out here. Looks like they're very close. That's as your A point. Your B point being the July 15th level. that low, and then your C point being the high from July 22nd. We also noticed that we've got a perfect 1 to 1.618 A to B equals CD to the downside at the 90.40 level. That was the price projection. What we actually saw was a low of 90.43. God, you got to love how that works as a projection tool out here, as a price projection tool. And what we can see is we've also made a 100% move of a move by getting back into the lows here from January of this year. So there's a number of reasons, number of advanced leading indicators out here that would suggest that what light sweet crude is attempting to do is to make a move lower out here. Now, I'm not saying to take this trade, but these are the signals that are present inside of light sweet crude as we take a look at it. You'd like to see some more bullish candles show up out here, and you'd like to see some kind of a sign of strength out here. It looked like we did have the market moving slightly higher, even though there was no price conviction to the upside, meaning to close on Friday out there. You did have some volume behind the contract. So that's what's going on inside of that market. If we go take a look at Goldilocks right now, you got gold trading up $3, trading out at $12.35 out here. Let's go take a look at the gold. There are no such, this is the daily chart we're looking at, there are no such bullish reversal signals as we take from a candle standpoint with inside of gold. We don't have a price relative strength divergent pattern. We don't have any of the above out there, although we've got our potential A to B equals CD patterns, and we have gold trading. Now let me pull this back here. Very likely gold at least wants to make a run for these December 31st lows out here. Do we have a confirmed A to B equals CD to the downside? Well, you've got a swing point that I don't have the contract volume on that. Let me do this. Let me switch over to the continuous contract. Those volumes should be pretty darn accurate out here. Give me a moment to do that. I believe that gold did break the swing point. That's being the 1240 level. Looks like it needed about volume of 91,000 contracts, and it was broken with 140 and 160. So you've got a confirmed A to B equals CD to the downside, a larger pattern that is out there. That price projection, the one-to-one price projection, that's going to go ahead and give us a, just put in the A to B equals CD down pattern right now. That gives us one-to-one of 1194. 1 to 1.272 is in the 1152 range out there. So at that 1194, that gets you back into the December 31st swing point, and that's really where the, as Tom likes to say, the market ought to walk, squawk, and talk to us. We'll see what happens as gold gets down and tests that 1181 swing point and see what kind of volume is behind that move out there. And that is what's going on inside of gold. If we take a look at silver out here, silver trading up 2 cents right now, no big deal out here. If we take a look at silver, what silver has done is already gotten back to its lows. Its swing point was back here in May 30th. This is the daily chart that we're looking at. 1816, you're trading now. 1861 is what I should. 1862. You're trading at 1863 right now. A break of this level here with some accelerated volume and wide price spread, that would set up a very large A to B equals CD to the downside. Right now, what silver is doing is just moving sideways because it is in an extreme oversold condition out there, but no bullish reversal signals inside that silvery metal out there. Right now, we got Dow futures. They're up 14, S&P up a point out there. I would say expect a bounce today. We probably see a market that opens. We see maybe a little bit of selling that takes place, and then we see a bounce for the rest of the day. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down 14 points. Trading out at 16,971. S&P off a couple at 1983. NASDAQ Composite down 8, trading at 45.59. Russell 2000 off 2 points this morning. She's trading out at 11.58. Lead the charge. The upside out here, you've got Rewalk Robotics, but that is an IPO from Friday. It's trading up another $9 here this morning. RWLK is the ticker symbol. Alere Inc., it's trading up 16% this morning. ALR is its ticker symbol. Molson Coors, that's still on the way up. Bud on the way up. I guess I saw some news about Heineken out there this morning. Maybe somebody looking to buy them out or something along those lines. You've got Avenir Pharmaceuticals up 45%. GoPro up. There's your new Tesla stock. GoPro trade out. It's about $71 right now. Bit Auto, BITA, up about 1%, up 80 cents. El Pollo Loco up $40. The food craze out there. Taco Bell, huh? Tesla, that is trading to the downside out here, so that's off 3% right now. NPS Pharmaceuticals down 12%, down $4. Google off 4. Gilead Sciences off a couple of points right now. MDU Resource Group down about 8%, off 2. Amazon down 3. Caterpillar off $1.31. as we speak. Let's take a look at the currency pairs out here. So let's look at three of them. Let's look at your friend and mine. We've got the Euro Japanese Yen. Now, the Euro Japanese Yen, the bulls should have been happy with regard to Friday's action, and at this stage here, maybe not so happy. Why do I say the bulls? Well, look, folks, this currency pair tracks the U.S. stock market still better than any other currency pair out there. And we take a look at Friday's action. It broke through a descending price channel. It's a descending price channel that's been in place since the March 2014 time frame out here. So it's been trading. It broke out of that price channel. And what it's been doing ever since it opened last night, since this currency pair opened last night, it has been trading lower out here. So the real test is going to be whenever you break a price channel, whether it's horizontal or diagonal out there, what you actually like to see is you like to see price come back and test that area and prove to you and prove to the world that it is done with that channel. It is done with that trend out here. So it looks to me like we're going to see the Euro Japanese Yen come back and test that level. What is that level? Hey, if it does it today, it's probably right around 138.09 or so. Right now, trading out at 138.48. That is what's going on with that currency pair. If we take a look at the euro as it relates to the U.S. dollar out here, what do we have going on? All we have is a market that's moving sideways, that is working off an oversold condition out here. That is what the euro is doing. Small-bodied candles, nothing really in the way of any kind of reversal out here. This is more bearish than bullish out here, so it does look like the euro has more room to run to the downside. We'll change that opinion as soon as we see some kind of reversal signal to the upside, but at this stage, that is not what is in the cards for the euro. If you wonder where is it that the euro is likely to head to, we're best off to put up a larger time frame chart up here. That means let's take a look at the weekly chart. The weekly chart says to be 1.2751, somewhere right around there. That is likely we will see the euro make a bottom. Big support down there, 100% move of a move. If that area breaks, we'll take a look at that stage. But at this stage, that would be the target that I would be looking for to see some type of significant counter-trend rally unfold at a minimum. I do mean a significant rally. Of course, on a weekly basis, we've got a very oversold condition inside of this currency pair out here. If we take a look at a monthly chart, I'll go ahead and put the monthly chart for the euro up on my screen. A break of that 127.51 level, what that would do is that would say, hey, Steve-O, you were wrong. The next time that you see any kind of really bullish action out here is right around the 123.6 to about the 1.207 level out here. But the first deal has got to be that 1.275-2-ish area inside of the euro. Let's take a look at the Japanese yen. Of course, we know that the Japanese yen is off to its own new constellation system out here. This happens to be the monthly chart. The monthly chart shows that a swing point is being taken out. Hey, we're only halfway through the month. I just have the monthly time frame up, so that's what we will go ahead and show out here. Now, if we take a look at A to B equals CD patterns that are set up inside on a monthly basis for the Japanese yen, just to give you an idea of where it is likely headed to, and it's a doozy out here. It is likely headed up into about the 121.96, 129.62 out there. So get those presses ready out there, because the Japanese yen, it wants to make its way all the way back to the highs from 2007 out here. That means it wants to get weaker against the U.S. dollar. That will continue to put some strength inside of the U.S. dollar index. That's what the monthly chart is suggesting. If we go take a look at a weekly chart out here, weekly chart, he's going to show the same thing as a monthly for the most part. The daily chart's the one that gave us that first signal being that the Japanese yen had broken a recent trend line that was in place out here. That was a trend line coming back off of its highs from January 2nd, and it broke that trend probably right around, let's just put that trend line on there. No, don't let me just give you a right around. How does that help you out here? There's the trend line, and once it broke that trend line, you see it's a pattern that was in place before, and that was really, it broke that trend line back here July 30th and came back and tested it, but it is off to the races out there. It's in the extreme overbought condition out here, so we should see the currency pair pull back at some point in time. If we take a look at the Great British Pound, just simply to go finish off the currencies out here, let's take a look at the daily chart out here. Now, the daily chart gave us a nice little reversal signal, some additional follow-through. It was a little bit of a morning star pattern out out here. It says pretty significant support inside this currency pair at the 1.606. But you really got to, if you didn't have this, you didn't have this stuff going on in Scotland out here, I would say, hey, you've got your first sign of reversal signals inside of this currency pair. But this was such a linear sell-off that was going on ever since the highs that were put in back here in July. And it was as if just a straight line linear move out there. It's really kind of an unusual pattern inside of any market out here. It's like a big, huge central bank was saying, unload, but not too fast out here. Not so fast, as they say. So that's what's going on inside the currency pairs as best as I can see them as we speak right now. You've got the Dow off 18, S&P down 3. So far, the market really living up to my expectation here, which was we'd see the market open. We'd see some kind of a drop. Now, whether that's going to continue or not, that I don't know. My expectation is that we will see some kind of bounce inside of the marketplace unfold today, if not sooner. Well, how can it be sooner than today? It didn't occur yesterday. All right, now let's go take a look at some stocks that are moving. Let's go take a look at that Tesla. Tesla's off 3%, down $10. Let's go see what Tesla is doing out here. And the case of Tesla moving down below market profile low out here, that's at about the 269.53. You're at 268.50 right now. Tesla also had a little bit of a sign of strength, had a little gap up here. So, where this thing really broke out from is the trading session from August 28th. The volume inside that breakout was about 10 million shares. So far today, 1.4 million shares in only 12 minutes of trading. That's a pretty decent volume inside of Tesla. What are some folks taking some money out of Tesla to buy, to prepare to buy Alibaba? Could be out there. So if we take a look at where could it be that Tesla could pull back to if it gets below that breakout area. First, let me get rid of the A to B equals CD pattern. Let's take a look at some significant volume areas out here. Right here, you got this trading session from February 26th out there, and I'd say that would be really your first test of support, your second test of support with inside of Tesla, probably just the bottom of that candle. So Tesla ought to find support between 228.45 and 258.58 unless volume just really starts coming out of this thing. And that's what's going on inside TSLA. Let's take a look at Netflix. Netflix off $5, another momentum stock to the upside. Maybe some profit taking taking place outside of this equity in order to make some room inside of some portfolios for Alibaba out there. We do take a look at that Netflix, though. So far today, pulling back 219,000 shares. It's got some volume out here at this candle session from July 1st. So right before the holiday out here, prices traveling right down into it. Ought to find some decent support, perhaps at that low around 455 out here. At 460 was an old market profile low, one that had been in existence all the way up through today's action. So I expect that 460 area to act as pretty decent support for Netflix. We take a look here at NPS Pharmaceuticals. Let's go look at that. That was a rocket ship, wasn't it? Yeah. Ooh, that's dangerous. Almost making an island reversal out here. And in one sense, it could, but it looks to me like this really wants to trade up into this swing point here from June 2nd. That high is at 37.85, so that is likely the target range here for NPS Pharmaceuticals. If we take a look at what else we have moving, I'm just looking at a couple things here moving to the downside. Let's take a look, and we'll switch over. We'll take a look at Baidu. So if we take a look at Baidu, that's off about 1%, down $2. Let's see where Baidu is going to pull back to. So Baidu had a nice sign of strength here on July 25th. Now, that sign of strength has never been tested. So the first level of support, we'll call it that market profile low in that 214 area. That should be pretty decent support. A break of that area, though, that would suggest that you would see price pull back probably to the trading session of July 23rd out there. If you can pull back to July 23rd, that says, hey, that 195 area is likely the pullback inside of Baidu might set up the next buying opportunity, so long as the volume on the pullback is done with light volume out there. If we take a look here at the, notice the NASDAQ composite is really getting kind of hammered. Of course, I've got another screen here. I'm looking at some 30-minute charts out here for the NASDAQ, but let's just stay here on these equities for the moment. I want to take a look at what's popping to the upside. So you got also the downside out here, you've got the IBB. So if we take a look at the IBB, that's the NASDAQ Biotech ETF. Looks like that's headed down for a support level here, 264.42 out there. We did have the IBB make a higher high, do it with less relative strength out there, as it made that high on the trading session of September the 2nd. So the first level of support inside of the IBB ought to be at about that 264 level. A couple things here moving to the upside. Let's take a look at this equity here. Alere Inc. ALR is the ticker symbol. You want to talk about a pop, a 15% move to the upside. I don't see any news behind the move out there, but there must be some. Now, this is kind of an interesting stock. Let me pull this back. I say interesting because it's got an untested high volume low. So should this thing ever decide to fall out of bed, and based on previous pattern behavior, it looks like it has done that in the past, so no reason for it to not do that in the future. Trading out right now at 42.05, but the low that it could come back to and get tested is from August 4th. The price level there is $33 and change. Up today with about 770,000 shares as we speak right now. Let me pull this back even further. Let's put this on a weekly time frame, see if there's maybe a different outlook for this ticker symbol. ALR is the ticker symbol. Now, it really seems like it has run its course out here. Kind of a... and not so much a consolidation pattern, but it's got this little swing point out here from the trading session of January 11th out there, and that is a resistance area. That is a swing point high of 44.87. Actually, on a weekly chart, with the exception of volume coming out of it, all the volume, big volume on the weekly chart is also to the downside, with one exception, and that was where this equity broke out on July 29th. That had 7.2 million shares behind that move out here. So trend-wise, if we take a look at a trend coming off of the lows back here in November of 2012, what we're going to see is, in essence, the trend has been was broken inside this equity, but is back inside that trend. So that trend line probably becomes a pretty decent area of support. But you got to be careful with this wide-ranging bar, accelerated volume on August the 4th with a untested low out there. That is for ticker symbol ALR. Let's go take a look at Molson. Let's go see what's on tap for Molson. TAP is its ticker symbol. It's taking out a swing point as we speak, taking out a little bit of a double top out here. Let me pull this back. Boy, this equity has been on fire. Let me put this on on the weekly chart. Let me grab a sip of water here. Sorry, folks, couldn't wait for 30 seconds for that. As we take a look at, at Molson here, a swing point, had a nice wide price spread, accelerated volume on June the 9th, moved a bit higher the weekend of June 16th. That high 75.55, 8 million shares out there. Today, it has done 3 million shares. How about that? It's taking out a swing point with volume out here. We'll put it on a weekly chart. Let me see if this is all-time highs. Well, I'll do that during the break. 877-927-6648. This is Steve Rhodes. This is TFNN. Dow's out 26, S&P down 5. We'll be right back.
Take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 23, S&P is down 6. The big mover, though, this morning here is the NASDAQ. So the NASDAQ here down 41 points. Let's go back out to TAP, and then we'll go back and take a look at a couple of things out here, specifically the NQ. If we take a look at the monthly chart here for cores, ticker symbol TAP, if we take a look at expansions from swing points, that would take us back into May of 2008. Yes, May of 2008, that high, 59.51, down to a low that was put in March of 2009. What we'll see is the price projection, the 1.618 expansion price projection of those sets of swing points take you up to a price level of 77.28. The actual intra-session high thus far, 77.78. So this may be, actually, even though we've seen a breakout with some volume out here, this may be an area where Molson starts to get tapped out so to speak, out here, and that's that 77.28 level. Now, we opened up the show. I said, hey, the most important thing we can do is to understand what kind of market we are in. So let's go back and let's take a look at it. Now, the day is not over, but if we do take a look at the December contract here for the NASDAQ, we can see here that it's beginning to break this consolidation box out here. And I'm given the benefit of the doubt. It's at the top of the box, pretty easy to identify out here. So let's watch the level here of 4,047. Let's utilize that as the bottom of our box out here. If we see it close back above 4,047 today, what that is telling us is that all we saw was just an interest spike low. And likewise, if we see it close below 4,047, well, then we want to start taking a look at the consolidation patterns in the other markets as well. If I take a look at the Dow futures right now, still Dow futures holding up okay right there at their market profile low out there, and okay with inside its version of its consolidation. The same can be said here with the S&P futures as well. Still trading for the most part inside that little bit of a consolidation box. Key level to be watching there is 1977. Of course, if we go in, we take a look here at the VIX index. Let's go see what the VIX index is doing out here this morning. Oh, there we go. It's right there, that tab on my screen. Trading out at 1407. So it's above the 50-day exponential moving average, 1284. Of course, that's where all the damage in the markets can be done. When the volatility gets up there, it's another way of saying that you've got liquidity that is drying up. That's how Stevie likes to use it. That's the 50-day exponential moving average. As long as the VIX holds that level, its message is one of a market that will trade lower to sideways out here. That's what we have going on inside of that. A quick peek here at the summation index for the New York Stock Exchange. Last week we saw the NYSE get down into its 0.382 retracement. That 382 retracement was off of its low out here from August the 7th to the high that was put in on September the 4th. That level is under attack again this morning. That level being 10,897. But what I can tell you, this is I take a look at that price oscillator right now at the 195 level. 150 gets you into a oversold condition out here. So the not that it can't get more oversold, because it most certainly can, but the summation index, the price oscillator out here, is suggesting that we see some kind of a bounce inside of the marketplace. So, folks, it is a marvelous Monday. As always, thanks so much for joining us here at TFNN. Stay tuned. The Money Master Show is up next. And always remember this, folks. Always remember that you have an amazing power within yourself. And that power, it's so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces. But most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.